Good morning, this is Jack from Charting the Markets, and this is the pre-market webinar for the morning of Tuesday, the 24th of March. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts, and I'm not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com. It's published on YouTube after a delay of 24 hours. All right, great. I wrote a post this morning, so have a look at that. I'm looking at the bigger picture there, which frankly is looking pretty grim. Unless you want the market to go down, in which case it looks great. But I am thinking we might see a rally this week. I was noting a couple of problems with that. But the ceasefire from the US doesn't appear to be a ceasefire even from the US so far. It's based on talks which appear not to be happening. Israel hasn't stopped attacking. US hasn't stopped attacking, and actually attacked two very sensitive targets yesterday: one desalination plant and last night, and a civilian gas pipeline. Which is not promising for this to last all week. But I would love to see this rally last for a week because it could form a couple of right shoulders on SPX and Dire, which would be very useful and set up the patterns nicely for the next move down. And at the moment, I'm not seeing any reason to think that there won't be a next move down. So we'll see how that goes. But in terms of the short term, ES obviously made the target, has pulled back, but this could be a bull flag forming. NQ, the same, made the possible near miss target. RTY made the target. Again, we've seen a rally, could be a bull flag forming from there. I'm not seeing a lot of reason for the market to be encouraged about this this particular ceasefire at all. But so far, it's not collapsed back into a retest of the lows. So, we will suspend our disbelief and see how it goes. I would like to see this rally deliver. YM, again, saw a spike up on the news and what looks like a bull flag since then. DAX, the same. ESDX, the same. And Nikkei, a bit different and has retraced a little more deeply, but not that much different either. At the moment, I'm not seeing anything looking at the market action suggesting that we're not going to see the rally, although it's not obviously hugely encouraging so far. In terms of the, I was mentioning in the post today that we come back and tested the 50 DMA. This is a 50-week moving average. This is a really important support in an uptrend and resistance in a downtrend level. So a break of it would be potentially very significant, but obviously it's a pretty good place to bounce. And of course, we are forming, as I was saying, a potential head and shoulders. Really, I'd love to see a rally which lasted a couple of weeks, topped out maybe at the 50 DMA. I'm skeptical as to whether that can be delivered. Honestly, I'm skeptical as to whether we could even see it last a week, but we will see. But this would be a good place to see a rally if we can deliver one. Nothing to see really on the hourly charts or the 15-minute charts. We're really just talking about the dailies. Looking at the Qs, we've already broken down for a double top with a target in the 523.28 to 523.69 range. Often see a rally just after the break. This could be that rally, but we're not looking really for any particular target. We've already got the double top and it's already broken down. Looking at Dire, we're seeing a bit of a rally here. NQ, of course, Qs rather. This actually tested the daily middle band. The 3SD lower band at the low on Friday. That's a very good place to see a rally, and we are seeing a bit of a rally. I'd love to see it get back to current resistance at the daily middle band, but we'll see whether it can manage it. Looking at Dire, we have reached a potential head and shoulder neckline. I've got two that's reached the higher one. Ideally, get back into the daily middle band, possibly a little higher, but I'm skeptical about getting higher. In fact, I'm a bit skeptical about getting back to the daily middle band, really. Looking at the bigger picture chart on IWM, we have a head and shoulders which is already broken down. Now, I don't really have an alternative option here. So if we go up and break, I was voicing a concern that we might break the right shoulder high, which is at 257.19. But as long as it stays below that, then we've got a nice looking head and shoulders, which is giving us targets for the next move down at about the 216 area. We'll see how that goes, but potentially, if we can see a rally this week, potentially we've got four nice patterns looking for the next downside targets. Now, how bad could this war get? Very, 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 very bad. This war is a potential economic disaster. And really, we're not seeing anything to suggest that it's not going to be an economic disaster at the moment. But I'm optimistic it won't be. But if it is, then potentially we could retrace all of these moves up from the April moves last year and we're in a potential crash scenario. We're looking at a worst case. We're looking at a oil spike that could last for years, be worse than anything we saw in the 1970s energy crisis, be highly inflationary and massively depress growth. That would obviously be, well, to summarize, bad. So we'll see how that develops. I'm hoping that can still be avoided. Some sign of intelligence on the US planning side might be a useful thing. And at the moment, we're not really seeing an awful lot of that, and certainly none at all from the Israelis, who really aren't really worried about any of the concerns that anyone else has, I don't think. So we'll see. All right, looking at DAX, seeing a bit of a rally here. The buy signal there actually failed. We've still got a daily RSI 5 buy signal fixed here, and we've retested this lower in the K. This could be the second lower double bottom, setting up a retest of the high. Bit skeptical about that, but we've still got the RSI 5 buy signal. We will see. We also have two other buy signals, and they are on IWM, where one fixed on the rally yesterday, and on Dia, where one fixed on the rally yesterday. That is promising for a rally if the rationale can actually last till Friday. We'll see, but I would really like to see that rally. We'll see how it goes. Okay, in terms of the others, as we were seeing the rally on equities, we also saw a pullback on the US dollar, which is with this oil crisis, every time it gets worse, dollar's been going up, and bonds been going down, and oil has been going up, and equity has been going down. So, and we're following the same patterns here. ZB seen a bit of a rally, not a great deal of one, and I'm not that optimistic. And the main targets are still below. I was talking about those in the bigger picture webinar on Sunday, and the obvious targets are lower. And potentially, if this gets out of hand, then we could be looking at a scenario where inflation goes up, and these IHSs I've been looking at on the bigger picture with targets in like the 9.5 area for the 30-year yield could potentially make target, which would really not be good. But it's we are in a bear market on bonds here, and that would be entirely in line with what one might expect. I've been looking around for a potential trigger for this, and this very much could be that trigger. We will see. All right, looking at coil. This is Brent crude. Seen a nice little pullback here. Could, if you squint a bit, just about have a head and shoulders forming, but I don't think so. So I'm thinking that we're probably going to be seeing this go up again in the fairly near future. CL the same. I would say that there does seem to be a significant disconnect between the futures prices and the actual physical prices. This is something I was talking about on Sunday, and it does appear that the price, on the nail in Oman at the moment is about 140 to 160 per barrel, and that is far removed from anything we're seeing here. There's talk that the disconnect might be due to the amount of stuff that Russian oil on the sea which is being sold. I don't know, but there does seem to be a disconnect, which is suggesting that as and when that disconnect ends, these will be going up quite a lot. HO pulling back here. RBOB pulling back here. NG, the IHS has failed, and we're really looking for a retest of these lows here. I think there's two kinds of gas. There is the natural gas which goes through pipes, which is unaffected by the crisis, and there's natural gas which is liquefied natural gas, which is very much affected by the crisis. I think we're actually looking at the prices for the first one. Here we're certainly not seeing much of a problem, and if we were looking at if LNG was a real part of this market, well, apparently there's about 9 days supply left before serious shortages begin. That's not a lot. We'd be seeing more of a reaction. In terms of GC, we've been seeing a bit of a rally on with the equities rally. Not a lot, but it looks like a bull flag forming here. Looks like a little bull flag forming on silver as well after the first spike up. On palladium, the same. On platinum, the same, leaning towards at least some more upside. But if gold continues correlating with equities, then when we set up the next leg down, which I'm not seeing any reason not to expect, then we would likely be going down with that too. And I do have lower targets I was talking about in the big picture on Sunday. Looking at HG, possible IHS forming here. Um, Keeping an open mind, this is very much not a precious metal. If we see a big economic decline, then due to this crisis happening, it's very hard to see that copper won't go down a lot. All right, looking at the other currencies, this still looks like a bear flag on euro. This could be a double bottom here, but this kind of looks short term like the same as the bear flag on the euro. USD JPY, I'm wondering about a triangle forming here. If so, that would likely be bullish. USD CAD still in the same overall bear flag channel. Australian dollar, possible head and shoulders forming. NZUSD, potential double bottom here. Kind of a mixed bag. I'm not really reading an awful lot into these. KC, we've moved higher here. This could still be a bear flag forming. Doesn't really look like a bottoming pattern forming at the moment. SB, still pretty close to the highs. Week 6-minute sell signal has fixed, and if we retest this high, could develop into a full size one. Still wondering about some retracement here, but we're not seeing much sign of it yet. CC, this looks like a move up and then a bull flag. Not the same bull flag and not the same time frame as the equities one, of course. But this is setting up, I think, probably a retest of this high. CT, this looks like a bull flag forming. And actually, the other ones which are looking as though they may be going up on fertilizer are wheat, where this looks like bullish consolidation, soy, where we've, wheat, which looks like bullish consolidation, although this little double bottom has failed. I need to mark that in. ZC, where this looks like a bullish consolidation, and soy, where this could be a bullish consolidation, but we do have a double top that's broken down with the 117 to 120.75 area. Looking at lumber, we've seen a decline, and the week 6-minute sell signal has reached target. Wouldn't be surprised to see this just go all the way back to the lows here, but I'm not seeing a pattern for that at the moment. Looking at ZL, this still looks like a bull flag forming. Live cattle looks like a bull flag that is broken up with a target at a retest of the high. And lean hogs, I'm still wondering about a bit lower to set up a very nice bull flag, but it looks like an overall bull flag forming, in which case I'd expect to see it reverse back up fairly soon. All right, great. Let's have a quick look at questions. All right, in that case, I think that's a wrap. Everyone take care, and I'll catch you guys tomorrow. All right, cheers.